Hello, everyone, and welcome to our deep dive into one of the most critical environmental discussions of our time. We're asking, cutting carbon or just talking, the real progress of transport emissions. For decades, the world has grappled with reducing greenhouse gas emissions, and transport has been central to this conversation. Today, we'll explore its history, analyze recent data, and project what the future holds for our supply chains and global economy. Let's understand why transport is so critical to global emissions. From the Industrial Revolution, moving goods and people rapidly transformed economies and societies. However, this mobility came at a cost. Fossil fuel combustion in vehicles, ships, and planes. This made transport one of the largest and fastest growing contributors to global greenhouse gas emissions. Historically, curbing emissions emissions faced hurdles, balancing economic growth with environmental responsibility. Now, let's look at the current landscape, starting with road transport. The rise of electric vehicles, or EVs, has been heralded as a game changer. Countries worldwide are investing heavily in EV infrastructure and offering incentives for adoption. However, the picture isn't entirely clear. While EV sales are soaring in many regions, the sheer growth in freight transport, driven by e-commerce and global supply chains, continues to put pressure on emission reduction targets. Are the gains from EVs enough to offset increasing emissions from heavy-duty trucks and vans? Recent data suggests a complex interplay where technological advancements race against escalating demand. Next, we turn to shipping, the backbone of global trade. Maritime transport is incredibly efficient per ton-mile, but the sheer volume of goods moved means it's a significant emitter. The industry has made strides in efficiency gains, adopting slower steaming speeds, optimizing routes, and exploring alternative fuels like LNG. Yet, these efforts are often overshadowed by the relentless explosion in global trade volumes. As more goods are shipped, absolute emissions from the sector continue to be a major concern, prompting calls for aggressive decarbonization strategies. Aviation presents another unique challenge. The industry has a strong track record of improving fuel efficiency through advanced aircraft design and operational optimizations. Newer planes consume significantly less fuel per passenger mile than their predecessors. However, much like shipping, the rapid growth in air traffic, both passenger and cargo, threatens to negate these efficiency gains. The demand for air travel and expedited cargo shows no signs of slowing, pushing the industry to explore sustainable aviation fuels and even electric or hydrogen-powered aircraft for shorter routes. Amidst these giants, rail often emerges as the overlooked low-carbon winner. For both freight and passenger transport, electrified rail offers a significantly lower carbon footprint compared to road or air. Its efficiency and capacity make it an ideal solution for reducing emissions, especially for long-distance freight and intercity travel. Despite its advantages, investment in rail infrastructure has varied globally, and its full potential as a decarbonization tool is yet to be realized. So, with all these efforts and challenges, are transport emissions actually declining, or are they just slowing their growth? Recent reports indicate a mixed bag. While some developed nations are seeing a plateau or slight decrease in transport emissions, global emissions from the sector continue to rise, albeit at a slower pace than projected without intervention. The pace of decarbonization is not uniform, and the scale of the challenge remains immense. From a supply chain perspective, what does this mean? The push for decarbonization is fundamentally reshaping logistics. Companies are increasingly scrutinizing their transport networks, opting for multimodal solutions that prioritize low-emission options like rail and short-sea shipping. There's a growing emphasis on localized production, optimized warehousing, and last-mile delivery solutions that leverage EVs or even cargo bikes. Future supply chains will be characterized by resilience, transparency, and a strong focus on environmental performance. Driven by both regulatory pressures and consumer demand, from an economic standpoint, these trends offer several key insights. The transition to low-carbon transport is a massive economic opportunity, driving innovation in battery technology, renewable energy, and advanced manufacturing. It's creating new industries and jobs, while also posing challenges for traditional fossil fuel-dependent sectors. Governments are playing a crucial role through carbon pricing, subsidies, and infrastructure investments, aiming to steer economies towards a greener future while maintaining competitiveness. The economic winners will be those who adapt quickly and invest strategically in sustainable transport solutions. Looking ahead, the future perspective is one of accelerated change and continued innovation. We can expect further advancements in battery technology, hydrogen fuel cells, and sustainable aviation fuels. Digitalization and AI will play an increasingly important role in optimizing transport networks and reducing inefficiencies. Policy frameworks will likely become more stringent, pushing for faster adoption of zero-emission technologies. However, the global nature of transport means international cooperation will be paramount. The journey to truly cut carbon from transport is far from over, but the direction is clear: towards a more sustainable, efficient, and interconnected global mobility system. The question remains: can we move fast enough